We'll review the previous week, review the any steady things that we need to do, and the speculation for the week ahead. It's Sunday, October 26th. I'm your host, Gerardo G. Moneypies, and welcome to this session. All right, y'all. So, yeah, this is the chart that we had from last week. This was the speculation that we had, and ultimately, right, we actually placed. We said we wanted to sell to then buy, right? And the market did come down to the entry zone and actually went lower than on this chart here. It went lower than we wanted to, right? But again, remember, I think we talked about like we got to get good at getting the meat of the fish, right? And if we look at this entire price section from the high of 43.60, right? And then all the way down to the low, it came down as low as 40.06, right? I think we mentioned before, right? If this was a fish, I don't know, Cyrus just thinks she sees like the tail or the head, one of those, right? Or both, right? This is the fish, right? We want to get good at getting the we want to get good at capitalizing for the week, right? On the body of the fish, where the meat is at. Where the meat is at. That's okay, Carrie. But yeah, so that's what it is, right? So we got to get good at those areas, and yeah, I think we were waiting for a sell. We had this base drop, right? If we kind of take it back a bit, let me go ahead. So better. So we wanted, we had speculated that this Friday of that previous week was bearish. This 1 hour base drop was around the 61% of that previous week. Okay. And we wanted price to around there, right? Around there, turn around. Well, it didn't. It went a little bit higher. It went up over here a little bit higher, testing the previous weekly high. And then from there, the huge sell-off happened on Tuesday. Happened on Tuesday. I don't think there was any news on Tuesday either, was there? I think the news this week only happened on Friday. If I'm wrong, please correct me if I'm wrong. But yeah,
Yeah.
this huge drop happened. What was it, Animal?
Yeah.
Yes, Friday news. Yeah, yeah. You came in and came out. Nothing on Tuesday. Says KG.
Yeah. No. Sorry about that. I think my microphone might be bad. Is it better?
Loud and clear, brother.
All right, cool. Thanks. All right.
Yeah, but no news on Tuesday. Just a massive drop off, and it just pierced the highs. It was a huge drop. It was about we compare Tuesday's drop, right? We compared just Tuesday's drop alone compared to the previous week. It's about 70% of it, maybe a little bit more, maybe 80%. Right? This entire movement upwards happened in 5 days, where 80% on the reverse side just happened on Tuesday. Happened on Tuesday. So huge drop. The next day, the candlestick trended downwards, and it kind of went over our weekly max. This is what I think we did about 80% weekly max compared to the high, but yeah, I went down pretty good. And then Monday was the blue box, Tuesday, Wednesday. And remember, guys, I did create the recording. Hopefully, you guys were able to put your template there. If anybody wants to copy and paste that Zoom link that I have here, paste it so they can get a glance at their recording. It's basically setting up from the WhatsApp. It's setting up the template for the indicator sessions. Really, really important for top-down analysis. That's what I do for the Sunday session. And that's yeah. Oh yeah. So we now also got the S&T update, which we'll also talk about today, right? Which yeah, I forgot about that one. Forgot about that one, which we'll see. Okay. Yeah, because I actually had planned another lesson, which is fine. I'll go ahead and squeeze it in here as well. But yeah, so last week the good one was the sell. Wednesday was also a good sell, I believe that we caught, right? And then Thursday and Friday kind of just slowed down, right? It slowed down a bit there. Let me go ahead and remove that. And yeah, so see Thursday, two inside bars, okay, on for Wednesday's candlestick. So I think this next week is going to be a pretty big move once things explode from here. So we just got to see which direction we go, and we'll update ourselves from there. All right, guys. So yeah, let's quickly talk on the S&P update, so you guys can get familiar with it, and then we'll go ahead and continue on. If you haven't gotten the update, I believe if you just simply go to, yeah, your indicator, right, should have like a little update available icon here. If it doesn't, simply just right click on trading view or open it and closing it, and it should be right there. Once you click on that, update to the latest version, it'll update by itself. Um, and then once you update it, it'll go there. This is one thing that I found out there was like a little glitch in the system, right? That can be beneficial, right? Can be beneficial for us. And let me tell you why, right? So when you save templates, when you save templates, you save that indicator, and it will not update later. It will not update later. So, for example, I updated to 5.0 here, right? Well, that's what I renamed it, SMT Chimoku System 5.0. And I already have my template saved for that, for the 5.0 updates. However, I made some modifications to my main template, and I kept the other one there, right? And you see here it says SMT boxes 4.1. So it's still, even though it's been updated, it still has the other one, and the old one will come in, right? So that's just an interesting thing, right? So to do, let me do go to this chart. I'll talk about the updates that we have. Go ahead and remove this for now. And hide it. All right, very good. All right, so yeah, there's a lot of updates. Ladies, if you don't if you don't see the little purple thing, Joe, click on those three little dots, and then just do. I believe you can just do, if it's just, yeah, do the update this script. So sometimes that little purple icon comes on, sometimes it doesn't. Thanks for that there. All right. Perfect. So yeah, with this new update, right, there is a lot of changes to the inputs of how you see. So, basically here goes we still have the 204 frame. That's the intraday frame for New York sessions. So this is kind of the frame that we kind of study, the structure. How's the structure looking? The SMT system, right? The one down here is actually has the new settings, 108, 52, and 17. And then the legend is down there. So if you turn off the legend, it'll turn off. You turn it back on. These colors are correlated with the direction, bullish, bearish, or neutral. And then as well, right, you can control the um, you know those to be on or off, right? Should be turned off in a second. Why is it not turning off?
You wouldn't happen to have another SMT box, you only have one. Okay, cool. Maybe I had more than one indicator at a time. I've done that before.
Yeah. Reset settings. Okay. There is a glitch. I gotta go fix it. Yeah, it's not turning off. So I gotta go back and fix that. Yeah, so you can turn them off and on, right? You can turn them off and on. So the neat thing about this update, guys, right, is the 204 box, right? because it's separate from the system of the S&P will only come on, right, on the 5-minute chart, which is now. And then we turn off the 204 right quick, right? The 5-minute box and then the 1 hour. That's the only time the system comes on. Okay. However, with this new update, this 204 box is independent. Wait a second, turn that on. Interesting. Okay, yeah, there's definitely a glitch. There's definitely a glitch in there. I gotta fix that. Anyways, so yeah, there's 17 box here. Okay, the frame that we have here, let me just frame it out. Okay, right there. Okay. The 17 hours have always been for me very important, right, to make a decision. When you change time frame, let's say to a 15-minute chart, the S&P for the most part disappears. But the 23% lines and the 17-hour frame will always be present just to kind of keep that intraday perspective going. So see, same 17 hours, same box, same 23% lines. So I think we can scale this up all the way up to the 45-minute charts. I think you can scale up higher, but I think that's where it kind of glitches up, which I'll fix after today. But yeah, that's that's keep the frame always present right there. All right. And what the new update has given us, especially on the 5-minute chart, was this tricky price action that we had on Wednesday. Okay. This tricky price action that we had on Wednesday that I was back testing. And let's see here. It was around, yeah, we always want to check it around 8 o'clock. Okay. And so there goes the old system. And let me turn on the old system right quick. Okay. So you guys can see. So here is the old system, right? We had bullish structure because it's taking into account the last 204 candlesticks. This was the low. Okay. And the momentum was bearish. So technically we look for sales, correct? And we did a pullback. We did a pullback to the top side. And there you go. So very strong pullback. And then as price gets closer to the 50%, which is right here, right? See how the momentum shifted bullish? We have structure that is bullish. We have momentum that turned bullish during the New York exchange time. And then our plan was, okay, let's try to take it. Well, I had a feeling we would go lower because of the mid 52 being red, right? But the momentum sometimes can take over. And I was like, all right, you know what? We may go up to there. And that's fair, right? That's usually what we do because of the structure. Well, it ended up going stronger to the downside. Okay. But the structure actually did hold up that we did not make a lower low that day. That the strongest move that day was the buy. You see that? And how can I tell, which one was a stronger move that day? Well, that's kind of where the sessions comes in. And you turn on the sessions and the sessions communicate to us, okay, which was a stronger move that day. All right. And let me quickly hide that. New York, turn on. All right, here it goes. New York. Wow, that's way off. Oh, here it is. So yeah, if I hit play here, that biggest move that day, right, was to the top. Well, actually, it was pretty equal. This was from 8:40 till 9:45, and then from 9:45 back to 2 p.m. the move was pretty equal. So regardless of which direction we wanted to go, this was kind of an even day, right? The sellers were good, but the buyers, we needed to get it from the top. So with the that's what that was the old update right there, right? The old update was saying, okay, I think I'm ready to turn, and the momentum was kind of a little tricky there. But with this other update that we just had, um, there we go. You see the gray structure frame, that's a 204. But the I guess you could say there's two momentums now, aligned with structure, and it was bearish. So we're taking a little bit of left candlesticks right here, of half exactly, half. And as long as these two lines are red, guys, the stronger move during New York is still bearish. So you see how the momentum here or the front 17 turned blue because that midpoint got slightly above. Well, as long as those two lines are red, it's still more bear. There's still some strength for us to go down. Okay, there is still some strength for us to go down. So visually, right, in that area, it did go lower. Okay, it didn't trend down, but it did go lower. Here we shifted it back up, and both lines here, the 52 went above this midpoint, therefore it turned green. So now, right, anything towards it is a pullback. So the strategy basically is enter of one of those green lines, okay, and the direction is going. And you see here, it kind of came back to this green line. The system is still bullish, so buys are good to go in that direction. Let's forward into the next day. Let's see here, 7 in the morning. Yes, KG. Yes. So we're kind of adding there. It's kind of a mixture of finding momentum, finding the mid momentum of the 204 box. Okay. Because gold is so strong right now that it's not using the entire frame, especially with the momentum. So both green lines, Sylvie, are the entry lines. Yes, anywhere around those are definitely the entry lines. Green or red, right? Green or red. Let's go into 8 o'clock yesterday. I mean, Thursday. And yes, Thursday and Friday were little tricky days, right? So here it is, right? Yep, that's the reason for that, KG. So here, right at 8 o'clock, the system, the gray frame is just the 204, just so we can kind of see the structure all inside. But our cues are the SMT system, which is, the 108, the 52, and the 17. Right, everything was saying bullish, and we got the strength back up here to get back above the 23% lines, and price just takes off. I believe it comes back one more time to one of the lines, but regardless, right here, this was the push up during that window, and we went to the top side right there. Let me go back one more time to 8 o'clock. So the strategy is this, guys, right? 8 o'clock in the morning, look at the SMT system, bib the SMT system, okay? Low to high because it's bullish. Our first target is right there, okay? Based on the fib. The momentum is already bullish. Any little pullback now is really good to go. And there it is. It just went without a pullback, basically. Right. Once we hit that extension due New York, pretty much the day is kind of over with, unless there's still room to go. Okay, unless there's still room to go. So yeah, that's a nice way for us to review. During news, right, we kind of have to kind of read the volume a bit better, wait for things to shift. During that news on Friday, which was a heavy news Friday, the system at that time was bearish. Okay. The system at that time was bearish. Let's take it back to 8 o'clock. You see? But we did have news, right? And then we had this huge new push on the news there today. But again, if you're more bullish on this, you can simply wait for things to balance out. Price touched the 23% line exactly. And then after that, right, See how kind of balances out this little line, and then it eventually turns green. There it is. So in an intraday perspective, okay, notice here how price came back to this green line and the top green line as well. So I mean, if this thing remains strong, then we're gonna keep pushing up simply because the system right now is bullish. Okay, but we'll see. We'll analyze it as we go. Um, and I have to go back and fix this. But the other update that I did right is the 204 frame. You can turn it off and on as we mentioned. Okay. The 23% lines. These are settings for the 204 frame. The pips move right here. You can turn that off or on. You can always also change the color of your frame, whatever color you want it. The label text, the border is right there. You want to change the border. And then the label, you can also make that bigger, smaller, change the color just so you can see how many pips is moved. This is important because this is going to always be comparing to the sessions indicator. That's the reason why I think it's important to have the sessions indicator, because this information over here is what we do need to compare it with that. Okay, we do need that information to compare. And last but not least, right, the projection lines. The projection lines are important. I turned off the setting where it gives them to us automatically, because this pip range has changed a lot. But if you want to turn on the projection lines, let's give us an example right here. Yeah, we can take into consideration the 204 box, KG. We can, just because we want to read structure, right? We want to read structure inside of the frame. And because it gives us the true 23% lines as well. But you could actually turn them off, turn that box off, and keep the 23% lines and just read the other thing that we had, okay, which is right here. Correct. Like it's kind of like 204, it's our intraday frame. I think I wrote it down right here in the note. The 204 is defines the intraday trading environment, right? During the New York session window. So it's independent from the SMT and validates setups inside the active range. So, a lot of people, right, they come in the chart and they're like, where do I look? Well, with that intraday frame in there, okay, with that intraday frame in there, this is how far back we look. No more than this, no more than that. It just makes it people for brand new people to, okay, what's the structure there? Is the momentum going to continue pushing us down, or is the momentum going to give us a pullback? So yeah, makes it a lot easier for me, in my opinion, to read. But just some of the little advanced stuff for the box, I like everything, right? Everything has an advanced and beginner scenario. And then we'll wrap it up here and then go to the education part that I wanted to do. The the 204 box, all the settings are down here for it. It's got a lot of settings, okay, but a lot of useful settings that you can use once you get familiar with the indicator. We do have the 23% line, like I mentioned, which are really important. Pips moved, all just little fine tune there. But the projection lines here are basically, let's go back to that's good here. Sorry. The projection lines, they're kind of connected with the sessions. And instead of drawing a fib on it, right? Instead of drawing a fib, it gives you the potential targets that you can trade towards without the fib. Okay. But you do have to enter them manually. And you do have to have the sessions indicator set up there. So projection lines, let's see what I have here. It draws the target 1 and 2 from the 17-hour range window, which is the 204 box. Take profit, or target 1 is the average New York session move, and target 2 is the 90% ADR. used with sessions indicator data. And the last updated was, this month. And manual override, yeah, this one here controls this right here. So see here on average on um, the daily range has been 1,041 pips, right? So you can you can use that exact number if you want, right? 1, 4, 11. And then the New York range is right here, 713. I'm also have been kind of testing out the overlap. Let me use the overlap in this scenario. London and New York combined together from 2 in the morning till 11 o'clock. As and it's 10:32. Okay, so once you put those projection lines, right there, they go. These will not change. So let's say, for example, if you are bullish in this scenario, okay, you will target or try to target there as your New York range. So it kind of gives you a target to go towards, and there it was just a little short of it, I believe. Yep, it was a little short. That's the reason why I like to kind of average down a little bit a lot of times. So 90% of 1,000 will just put their 900 pips and see it would have hit that target. I also use about 90% of the average, just 1,200 there, and then they'll balance out to that. This will work for every pair as we have, right? It does work for the Euro USD. It works for everything, but you do have to readjust those settings to these averages, right? Just double click. What is the average here? I used to have them automatic, but just with everything else moving so much, the averages cannot keep up. Daily range for Euro USD is 54, and the average is 42 on the London session. And there it goes. Everything is readjusted, and there it is. Okay, let's see here. Let's rewind it back to about, well, this is 8 o'clock. It kind of didn't do much. Yeah, this one already kind of already extended out. This is stuff. This is kind of when it meets their max too fast. It's kind of like done day. All right, guys. Yeah, those are the updates for the SMT. We'll keep using the system. I got to go back and fix some things. So none. It's just about nothing, no real changes. Just a matter of updating those things. Any questions? Always feel free to comment. Yes, and then Nico, that video that I sent, it has them exactly like mine. Yep. Yep. Just the only thing you got to make different is obviously your time zone down there. On the one that I gave you guys, I don't have the overlap. Okay. That's still something I'm kind of just backcatching on my own, but we still have the other sessions. I still have that template, right? This is the important template that would allow us to mark up charts to start with, before we analyze the sessions. But yeah, once you get into the 20-minute time frame, it's still very important, in my opinion, to always have an eye on the New York session, the London session, and the Asia session. And you now have the video to get you almost exactly like mine. Okay, just color preferences, it's up to you based on your charts. All right, yeah. So let's go into this session that I wanted to cover today. We'll check here about 15 minutes, and then we'll use the last 15 to do the weekly outlook. And it'll tie in today with Dan's favorite strategy, the 1-2-3 strategy. He became he keeps his eye on it a lot. And I was looking over some notes that I was thank you, Joe. Yeah, for sure. I was looking at some old notes that I had, and I came across this image right here. And basically it's like that literally is now what we just mainly focus on, right? That's what we've been focused on a lot recently. Just this pattern right here. Okay. Understanding that pattern, I think to me is key. But again, though, everything is also connected to this pattern as well, right? Everything is also connected to that pattern. Because once you see that pattern, right, you can just focus on that regardless of what the market is doing. So our job is to simply find the end wave pattern and know how to enter from it, entry one or entry two. So long story short, right, this is the 1, 2, 3 strategy. So let's kind of keep this in mind here just on the back end. Okay. And we're gonna talk about, for the most part, the patterns that we've been using to bring us back to kind of like the ETM supply and demand, right? For the most part, the rules that we have for the ETM supply and demand are: one is control and direction. Okay. Number two is entry and exit. And then number three is your risk management. Okay. That's kind of how the ETM supply and demand parameters are. So we have the ETM candles, but also it applies to structure as well. So you know when we have this pattern, okay, what is the control and direction for this pattern here? Bullish, right? Bullish. So we're looking for buys. Okay. Um, we can also say, this is our low, mark it up low. That's our high. And then this is our higher low down here. And then this is our higher high. Okay. Right there. Or you can say that's the impulse, that's the correction, and that's the extension, which simultaneously, right, is an impulse, right, in the other direction. I mean, in the same direction. So how do you mark this up once you see it, right? So I'll go ahead and remove that for that purposes there. So we'll mark it up like this. It's easier for me to read it. This is the pattern that we focus on and we try to master on different scales. Okay. So we got the structure there. So the first entry, okay, we got the impulse, we got the correction, we got the extension. So if we are thinking that this is going to continue upwards, we're at a higher high. So we find a low. So this is the low that I like, this bigger dot to this high right there. So that's where I'm saying, okay, price is not going to come back to this low. So that is where you measure your fib from low to high. Okay, like so. I'll just put the standard fib on there. Okay, there it is. And our entry zones are anywhere between 38, 50, 61, at least touching the 23%. When things are very strong, it touches the 23%, it takes off, right? But this is our entry zone right here in that area. Okay. And then our stop loss is at the 1 right there. Okay. And that's so we wait for price to come back anywhere here. It can go lower, but it will not go lower than there. And then from there it will take off back up to the extensions. Okay, so that's how it works. That's the end wave pattern that we try to focus on right there. If this end wave pattern or this low does not work, initially, right? We see the same pattern, okay? And if for whatever reason price is being a little bit more, or there's more sellers, there's some strong sellers there, right? Still controlling direction to the top side. Entry and exit. Here is where, if you prefer to draw the fib from the entire impulse, low to high, there it is. Okay. So you see here how price can come back and grab this low, which is still within the parameter. For the most part, I still personally do like to draw the fib like this. Okay. And then that's kind of where the bottom extension works. I think Pablo has been sending me some messages on how, he's not drawing the fib backwards, but sometimes the extensions below are there, right? To kind of there to still support price. So in this example here, um, let's say that this buying zone is not holding up, right? That buying zone is not holding up. Okay. And but the impulse started from up here. Okay. That impulse started from down there. So a lot of times price wants to come in, you know, and does not really buy from there, and it just breaks the low. And then here, right, there's some imbalance or an ETM candle that gets filled. And then from there, right, it goes back up, right? That's the pattern there that that's the structure pattern that we focus on. The structure pattern that we focus on. But so that's one example for us to use there. Let me go ahead and share with you guys as well. These images, or maybe the links work better. Yeah. Now, keeping the same rules in mind, that's kind of like this is our main pattern. This is the one that we can scale across all time frames, and kind of the one that supports the candlesticks, right? The other one is, obviously the single candlestick. The single candlestick is very important. Let's put a border there in this candle. Okay, same rules, right? Right here. The open and the close and the high and the low communicate to us our control and direction. So when we see one single candlestick like this, right? We have a low and a high. The 1, 2, 3 strategy simply needs the low and a high. Once you have a low and a high, you fib it, you measure it, okay, and then you you wait for that entry zone on the bullish example right here. Okay, we wait for the next candlestick to open. So this is the important part right here, remember, guys. This is the open, right? This is the close. The next candlestick will open where the previous one closed, and then we'll get a body towards the downside. Okay, so let's say the new candlestick opens up right here, right? As so. The new candlestick will open at the same level where the other one closed. Well, right, when it goes up, it'll be blue. But then when it goes down, right, it'll turn red or whatever color it is you have it. But because price traveled to that top side first, right, it'll leave a wick. And then this is what's going to happen, right? Price is going to be doing this, this, and this, leaving the wick at the bottom. And we want price to kind of touch that level. And once it touches, let's say the 50%, and it goes back up, right, it'll create that wick there. And then it'll pump back up to that extension, and then potentially close like that. Okay. And then it'll leave the wick there as it happens. Let's see. There it is. Okay. But then this candlestick will close bullish. Right. And this is the pattern that we're always looking for every single time. Okay. With our stop loss either being at the open or at the low. Okay. The entry and exit for risk management. So, that's the single candlestick pattern that's important for us to remember. The other one that I noticed with gold is the three bullish candlesticks. Okay. And what I've noticed about that, and that's the reason why I left that example here for us. Okay, let me do this like that right there. Let me leave that example here. Okay, where we measure that candlestick, and yeah, that's fine. That's the single candlestick scenario. But with recently, right, we've been having gold being very, very strong. And then I noticed, right, that it's just been marching on. So I think it's important to keep track of the last three candlesticks. As so. We put some wicks in there. And then I'm gonna show you something right quick. Right there. Okay. This is one thing that I've been noticing a lot with gold, guys. Okay. When there's three consecutive candles, where if it goes red first, then green. Actually, no, the a lot of the fake out, Sylvie, is actually when it goes higher first and lower. Okay. Um, like usually, because ideally, right, when price makes a push up, we want it to correct, right? And then push up. So I would say more of a fake out is this one. When we push up, we get a shallow retracement, and then it pumps up, and then it comes back down, and then it goes up. I would say that's more of a fake out. Understanding this movement will allow us to not chase that fake out, right? Because our rule is to enter at the 38, 50, or 61% levels. So anything that happens up here, just ignore it, right? Ignore it. It's just going to crash up there. So at that extension, let it come back to this level and then go back. Go. But yeah, so if it actually goes red first, we're doing exactly what we wanted to do. We wanted to pull back to that zone. Okay, that's what we're waiting for. Um, but in this example here, guys, here's one thing that I noticed, right? I made this little on purpose. I've noticed that with gold, what gold has been doing a lot is that we'll leave three candlesticks and then no, we do not trade that red at all. No, no, because we're going for buys. We're going for buys there. Once you see things on a higher scale, that's where you can kind of trade it down, right? But for the most part, it's getting used to the main movement. What I noticed with gold, guys, it's been doing this a lot. Let me color that red. Been doing that a lot, where we get an engulfing candle that engulfs the previous candlestick, but there's a lot of volume on that middle candlestick, right? And why is there a lot of volume in the middle candlestick? Well, imbalance is also there, right? The 2 wicks there. But if we just fib that middle candlestick by itself, right? Price is coming back to balance out anywhere between 23, 38% of that candlestick here that never got the correction. And literally, the candlestick will close like that. And then the next move to the top side is like that. And then it continues just pumping up and pumping up and pumping up. Alrighty. So that's the reason why I decided to show you guys the single candlestick and then the three candlestick pattern that I've been noticing with gold. Okay. Let me share this image as well. Let's go to the weekly scale. No, excuse me. Let's go to the daily scale. And hopefully, once you see this pattern, you just won't be able to unsee it anymore. Okay. That's the whole goal of this. And we'll start from here. Now, right. What we need to do is just keep track of the last three candlesticks, guys. Like here we have 1, 2, 3, 4, 5, 6, 7 straight bullish days. Okay, we really don't care about all of them. We just simply care about the last three. Okay, right here. This is the area that we care about. Right there. Daily, sure. So that's the area that we care about only. Right there. Okay. Those are three candlesticks. Look what happens in the next one. See how it came in and oh, well, it didn't touch the 50% of it, but it touched about 23%. And then it does that. You see that? Boom, boom. Um, Here it kept going upwards. Here goes the three candlestick pattern again. Okay, three consecutive. We had three here as well, but it wasn't as strong. But this is kind of what catches my attention. And then from there, price goes up. See? And then we have one, two, three. So what we're looking for is we're looking for that. Remember, this is the trending candlestick pattern. Okay, this is the trending candlestick pattern scenario where each low remains low, low, and low. Whenever we have that bearish day or that wick coming in and taking out one of the lows, the middle brother comes in and helps out. So simply, yeah. So the market is fractal, so it will repeat itself over and over again. This pattern can be found on every time frame, but I think just for scaling purposes, weekly or daily are best to create that long-term frame, and then we can go on smaller time frames and then use kind of more of a ETM candlestick for entry or a single candlestick for entry. Okay, but yeah. And what I did that yesterday, Nico, when I was back testing, and you just gotta follow three candlesticks. That's the best thing that I can say. Which we'll go here. We'll go here in the lower time frame here, because I was like, wait a second, what about these days, right? That don't really have a pullback. So let's say, for example, um, let's kind of do it right here, right? These last 3 days, right there. Okay. And this is where this is where the fib magic comes in. Okay. We have three bullish days. Each day's low held strong. Okay. So our main focus on this day is just simply that candle. It's still the current the third candlestick is still our the one that we measure, right? It's still the one that we use. So this is the previous daily high, it's the previous daily low. So whenever let's say we go down to let's go down to an hour chart. Okay, there it is. Okay, so obviously the gray box with the blue line, that's the three candlesticks. But this range here, okay, the low to high range is the previous day. So that 23%, it comes back down to the 23% line. That's going to be very, very important. If we cannot get below that 23% line, okay, well, first of all, right, our first attempt to entry is there, okay, at 38.50%. Okay, even though there's three bullish candlesticks, we cannot assume that the fourth candlestick is going to engulf the previous. We got to continue trending it. If it does engulf it, well, we don't get faked out, right? We don't get faked out. But if you see the price action here, okay, it came in and touched actually 38%, which is as we're supposed to enter. And you may be a little skeptical, like, you know what? It's been 3 days in a row. It needs a pullback, right? It needs a pullback. Well, the moment it got back about 23%, it said nope. Okay, so with that, and what just said, the fib, how the price walks around the fib is very important. And we have more room for less error if we analyze it from the weekly scale and the daily scale. Keeping those two in perspective, finding equilibrium on those will be a very, very good scenario. But now that we're analyzing with the three daily candlesticks or the three consecutive candlesticks, it would allow us to not get faked out on that big move. okay, on that big move. So even this one right here, right? These last 3 days, notice this candlestick came in, filled the imbalance, touched about 23% of this candlestick, and it's still pumped up. See, it's still pumped up. Now it stopped going bullish. And now we formed this big candlestick down. This is a live chart, guys. This is a live chart. All right. So based on this, we could potentially start going down, right? However, check this out on the weekly scale. See, we just studied this pattern, guys. We have 3 consecutive bullish candlesticks, and we have an engulfing one. This is the first time I've seen it on the weekly scale. It's been bullish all week long. Yeah. Even here, look at this. 1, 2, 3. Bearish day. This one actually came in and got in the 50 or of the first one, and then it found a way to pump back up. This one was tricky here. See, 1, 2, 3, a bearish day, but it didn't engulf the next wick. Had some momentum from this day, wick down, and then pumped up. So that's a good example here. So we're speculating now for the next week, right? We're speculating now. So yes, fair value gaps for sure. The animal. Yeah. So let's speculate this here. If we were back in March, Monday 31st, March 25th, okay, this is how we would have analyzed it, correct? We would have made a previous weekly high. Okay, we would have made a previous weekly low. Okay. And then we go to the 4-hour time frame. Let me put on my sessions indicator. There it is. Okay. And what would we done here? We would have fibbed from high to low, correct? Right? You guys agree with that markup? So the week closed bearish. This week closed bearish. 4 hour. Okay. This week closed bearish. It doesn't mean that we're going to trend down. It just means we have momentum to the downside, right? And the moment the current week, right? Let me add a candle. All right, so this goes to previous week. And it actually did it faster than I thought it would. You see that? All the week did was the new week, not the closed week, the new week. All it did was complete the momentum from the previous week at the extension twice, and then it takes off. You see? And they're completely reverses. All right, let's do this right quick. Now let's see how the things look in the days. Okay, so right, the extension held. So when price goes to the extensions first, right, it's going to come back and retest. This is a great example right here. Okay. Again, hindsight is 2020, right? Previous week was bearish. So the fib is bearish. And we use the fib as our map. The percentage levels of the fib, think of them as well as supporting resistance, but at the same time, think of them as equilibrium zones where price likes to go back towards, back to, okay? And here it came back multiple times to the -18 272 extension, right? Once it hits there, it's going to come back and try to rebalance zero. And then from zero, it's either going to pull back to 23% or complete uh, uh, a deeper sell. All right, let's see what happens on. So that was Monday. This is Monday's close. Tuesday goes back in. And goes back and retests the zero and see how the zero did come and push it down a bit. And then, but this support level here or this extension level was way too did not work at all. And look what it did. It now is going back to balance out the 23%, the 38%, and all the remaining levels of that fib. Okay. Goes to 50, goes to 61.8. Okay, so now see we got a reaction at the 50% level of last week. But what held it up? The 23% level did not allow it to go lower than that. Okay, so this tells me a lot of times that the sellers are not strong enough to they can't break 23% again. Then the day closed bullish, right? The day closed bullish. Immediately the next day, we went up to the 78%, the sell high of the previous week. Let's see what happens. See how it paused right there? It paused at the 78% level, but then it got broken. And now let's study this day right here, okay, before it made that big push up. So I'm going to fib this candlestick by itself now. Let's remove this junk here. Okay, look at that. The 76% of the previous week is at the same level of the extension of this daily candlestick, right? So price did not do a pullback as we saw. You see? And what's going to happen after this? Price is going to come back and retest the zero. And if that level holds, we're going to go higher. If it breaks, we'll go lower. What ended up happening? We went higher. Yep, there it goes. And there it went. Okay. But us fibbing the previous week bearish is not wrong because we need that level down there, right? We need that level. We need that extension level. We need to visually see where that extension level is at, so we can consider it as a target. We consider it as a area where price could turn, and then we analyze the remainder of the session and the movement. Excuse me. So let's go back to the weekly view. So see that wick right there was that push down from that previous week, but it ended up going extremely bullish. Right? And this is where we are now, guys. Okay. So previous weekly high, previous weekly low. Oh, but now, right, we'll consider we're going to consider the last 3 days as a guide as well. Okay, as a guide, and we'll do this for it. All right. That actually was a lot of it did hit 50% of it. Okay, so we're that right there. So now we're going to go down to the 4-hour chart. So from the weekly chart time frame, We just simply get the previous weekly high and the previous weekly low, and then we're just taking note that we have 3 consecutive bullish weeks. Okay, so the buyers are still strong. Let's not automatically let this candlestick fool us. Okay, that that it uh that it wants to go down. Let's go to the 4 hour time frame. All right, it goes to 3 days right there, and because it was a weekly a bearish close, we pivot from high to low like that. Okay, so a few things were catching my attention from here. Okay, one, right, we came back and balanced out 50% of these 3 candles. Two is that we're actually above the 23% of the previous week. Okay. And if we go back to that weekly view and with this fib, you see how it closed above 23%. So that could be saying, hey, no, the buyers were really strong and it's gonna just continue going back up. Okay. But let's keep it like this. But if we do get back below, right, the 23% level, we'll go to the extension, right? And the extension is literally 50% of that middle candlestick right here. Yes, because again, we want to know that level, Nico, of that potential, because a lot of times if a candlestick closes bearish, the next candlestick could also not close bearish, but also make a lower low because of the previous close. So, and it's been doing that bullish, right? It's easier, obviously, it's easier to interpret the bullish movement. Okay. So, and then this goes back to the trending candlestick scenario, right? Where the lows hold up, right? And you see here, look at this here. Let's zoom in on that candlestick right here. So this candlestick here, this is on the daily scale, right? It's a bearish candlestick. That's the open and that's the close. The new candlestick will open with the previous one closed. I'm not sure if it pulled up first or went down first, but regardless, all right, the candlesticks are making lower lows. It doesn't mean it will turn, but if we have a bearish close, what's the lowest it could go the next day or the next hour or the next week, right? So if it's truly a bearish candle, it'll come in and make a lower low of the previous candle, and then from there it'll close. In this scenario, right, it did not want to continue. Okay, it did not want to continue bearish after the third one, and it pumped up. But yeah, so we all and then here at this one here. So two things are going to happen, right, with the current speculation. And this candlestick is one example, and this candlestick is the other example. So we're either going, and they're both fibbed the same way. We're either going to just drop down first to the extensions, or like this candlestick here, it closed above the 23%. And basically from there, it turned back around. Okay. But we can always use multiple fibs for confluence. Okay. I'm going to color this one blue. And I'm going to color this box blue. Okay. This fib corresponds to the three candlesticks. Okay. And if we do drop down to this level first, using the momentum and the close of the previous week, look where we're landing. We're landing in between the 61 and the 78% of this three candlesticks, which this is an area of equilibrium, right? Remember the fib levels. Think of them as an equilibrium. Price is trying to balance out something as much as possible. It hasn't recent, just because it's so strong, but it's at least trying to balance out something. And using those three candlesticks, there goes 61%. There goes 78%. Not bad, right? Not a bad area to position yourself for a buy. Let's just say you want to just measure the middle candlestick. If you measure the middle candlestick by itself, and we try to find the 50% of it, actually, let me do it like this. There it is. So 50% of this middle week is right below the 61.8%, right above the negative 18 extension. So this little area right here is a good area for us to, consider it as support. Hey, price, man, I want to turn around anymore. Okay. So I'll leave these two fibs. So this is the swing of these three candlesticks, the blue one. And so there goes the previous weekly fib. And then just the question is, right, where is price going to try to balance out first? Do we come back to 50% and trade towards it with a seller step in? That's kind of where we're going to take it day by day, right? That's where we take it day by day, analyze things day by day, and catch our movement day by day, right? Because we don't need to catch the whole move. We just need to find a way to make some money in between. Okay. How did Friday close? Did Friday close? See, Friday closed bearish. Friday closed bearish. Okay. Friday closed bearish. I think, guys, that if we stay above that 23% level, I at least like us to go back and balance out to about right there, and then we'll kind of pause and wait to see, what price does from there. Does it really want to come? Does it really want to use the 61, 78% levels and come back down, or is it just going to remain up there and bullish? Or if the next week does it want to finish the lower low? So we can trade towards there, but to me, this is the buying zone right here, right there. This is the price level here. If we can get that deep, just below 4,000 one more time, that to me is the level to potentially, position for the buy. And let me share this chart with you guys, and we'll wrap it up. And last two weekly candlesticks, it goes to fill on the right hand side for it. There we go. All right, guys. Well, this concludes today's Sunday session. Thank you guys for being here. Thank you for taking the time to joining. Um, I'll fix those glitches that I noticed on the indicator, and then you should get an email that has been updated. Any questions, feel free to use the chat and we'll go on from there. Daniel, will you be doing a study group on Monday night?
Yeah, I think the Monday night at 9 o'clock seemed to work out pretty good. Had a
Okay.
good attendance, so we'll do it again.
Yeah, just send a heads up, man. If for whatever reason you get busy, I mean, obviously,
Yeah, we'll do.
you
All
can
right.
make an announcement. Thank you, everybody. Have a good weekend. Enjoy your Sunday, and we'll see you guys next week. Thanks. Bye.